please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Reported a rather strong quarter, beating expectations. CNBC TV18's Rukmini Rao caught up with the management of the company to understand their growth plans. Let's listen in.
We are extremely confident of our growth for the next few years, actually. I think the underlying foundation that we built, which is great talent reflected by low attrition, high retention, high attraction for new talent to come and join us, which is one leg for us. And the second is great customer satisfaction, lifetime high scores on our annual customer experience survey. That led to very strong deal wins, and many of them are very large, multi-year, multi-million-dollar deal wins, growing pipeline, improving win ratios. All of that points to all the foundations are in place. Barring any systemic or a macroeconomic kind of an event, I think the future is very bright for us.
Sure, but the digital wins for this quarter has been tad bit lower. Is that a one-off thing, or what is the kind of outlook as far as digital deals go?
Digital this time was 102 million, so it's actually a fairly strong quarter for us there. Beginning to see much more larger digital opportunities, so quite a few 5 million, quite a few 10 million, one or two 20+ million kind of opportunities in the pipeline. So overall digital continues to be very strong for us, and when we are looking at pitching for digital deals, customers are clearly validating that our specialization story is resonating very well with them. So scale is lesser of a priority for customers when it comes to choosing a partner for digital, but expertise and specialization is more valuable for them, and that places us in a very, very good spot.
Sure. Jagan, just to understand from you, you've also guided very good margins for the next year. Where is this confidence coming from? And also in terms of pricing, just want to understand from you, is pricing something that is going to be a pain point going forward as well in the coming year?
As mentioned by Rostow, the revenue momentum, we are expecting it to be very strong in financial year 19 compared to FY18. So this is going to on itself will help the margin to improve for us. And we have other levers like pyramid and campus hires, which is going to help us to improve the margin. Apart from it, on your second question, price realization, the price realization is stable at present at the contract level. We are not seeing any impact from any particular customers coming in this thing, and maybe 1 or 2 quarters between the quarters there can be a movement in the pricing, but overall pricing environment is very stable at present.
Sure. If you can also give us an outlook on the hiring for the next year and also the kind of hikes that you'd be rolling out and any impact of that in the coming quarter.
Yeah, we are planning to hire about 1,900 campus minds now. At the latter level, it will be based on the replacement and requirement basis, the fulfilling will happen.
Sure. Rostow, just want to understand from you, getting into FY19, what are the macros indicating right now? You've, of course, gone ahead and said that the pipeline is very strong. But at a macro level, are all the geographies looking okay for now?
I think both the US and Europe, which is our largest markets, are very strong. Asia Pacific also continues to do well, so I think all the primary footprint that we have continues to be very strong. But given the fact that the US and Europe are our largest markets, I'm just focusing more on that for the rest of my answer. Both did quite well, 7% growth in one, 6% growth in the other geography in this quarter. Momentum continues to be strong, customer sentiment continues to be strong. The only macro risks are either anything happening from a geopolitical point of view, or what's worrying many people is that if there's any implication from a terrorism point of view. Those are the macro risks that are worrying our clients at the moment. But barring that kind of an extreme scenario, I think customer sentiment, business sentiment is very, very positive, and that bodes well for us. People are beginning to make much larger bets in discretionary kind of investments, and we are well positioned for those kind of opportunities.
So the discretionary spends are seen going up next year?
As we see as of today, definitely yes. So customers are saying that they expect their business to be stable or improve, and therefore they want to make investments in capex IT, which is typically the discretionary kind of work. So we are seeing a change in the sentiment from our customers right now.
Sure, Rostow. One final question. You are having a very comfortable cash position as of now, and given that digital brings almost half of your revenues, Is there any kind of, acquisition strategy that you're looking at on the digital front going forward for the next year?
We continue to be very disciplined in our capital allocation. If you look at this year, we had our first buyback in the history of Mindtree, continuing to increase our dividend payout ratio. So the capital allocation strategy will be primarily driven by what's good for our shareholders, and we'll continue to look at ways by which we can support our shareholder expectations using the cash. Acquisitions will always be a part of the strategy, but at this point of time, nothing is on the cards.
Time for all our movers and shakers, and let's start off the segment with metals. Well, metal stocks are on fire. Aluminium as well as alumina prices, they have seen a big run. If you just take a look at it, in the last 2 weeks, aluminium prices has moved up by nearly around 25% at around $2,500 on a per ton basis, and alumina cost as well, they have spiked up by nearly around 80 to around 90%. Internationally, reports suggest that it's trading even at around $710 on a per ton basis. What happened? Why did this price spike come about? That's because there were disruptions at both alumina as well as aluminium. For alumina, in fact, there was a disruption at Eleanor, and for aluminium, there's a disruption at Rostow because of the US sanctions that were put out there. The key beneficiaries are really Hindalco, Vedanta, as well as Nalco. Now, there are three broad reasons really why did we see a big price spike overnight itself, and why the stocks are reacting. First, Goldman Sachs, they are talking about a number of around $3,000 on a per ton basis. The current price of aluminium is $2,500 per ton. That's point number one. Second point is that, in fact, Alcoa came out with a set of numbers. Yes, the numbers beat street estimates, so that's good news, but the commentary was very positive. They're talking about wider than anticipated deficit, and they're talking about strong aluminium demand growth going ahead. So that's the second part. And the third part is, in fact, a brokerage. We have Macquarie that's come out with a note. They are positive on Hindalco. They, in fact, are talking about a target price of 296 rupees on a per share basis. Remember, even when the stock fell, they were quite positive on the stock. They say that it's a top pick in this sector, so that's why they're bullish on Hindalco. We should actually pull up that stock. That as well is up nearly around 4 to 5%. But they're saying Nalco is a better play because it has exposure to both aluminium as well as alumina, and that's why they're saying, in fact, it's one of the biggest beneficiaries. Their target price is at around 77 rupees per share. But they're saying that that's considering the stock, giving it a multiple of 6.5 times EV upon EBITDA, and also, they're talking about aluminium prices of around $2,063 on a per ton basis, and alumina prices of around $380 on a per ton basis. They're saying a $100 move. It's much more than a $100 move, but a $100 move will give you a fair value of around 116 rupees on a per share basis. And the sensitivity analysis as well, that should come up for you. A 1% change in aluminium prices, that affects Nalco's profitability by around 3.8%, while in fact the change in alumina, that affects the profitability by around 2.2%, Rima.
Yes, and I think US imposed sanctions on the Russian company, towards the end of March?
It was on a Friday night. I mean, I remember very clearly. It was, we closed up. At that point of time, aluminium prices were $1,950 per ton. Yeah. And today it is $2,500 per ton. So, tomorrow it will be 2 weeks.
Yes, and in those 2 weeks, Nalco has seen a rally from levels of 65, 66, all the way to 87. Yes. So that's a rally of 33%. And Hindalco too has moved up from levels of 210 to now 260 thereabouts. Big up move seen in these stocks in the last 2 weeks. But Sonal, countering the moves of the metals on the upside are the oil marketing companies on the downside, every single day hitting fresh 52-week lows. What's the latest?
Well, the bearish views on these oil marketing companies continues. Now, CLSA has come up with a note where they've cut the target prices of all these three marketing companies, IOCL, BPCL and HPCL, ranging from 20 to 30%. For IOCL, they have made the target price now at 155 rupees, for BPCL at 375 and for HPCL at 300 rupees. They say that macro worries will actually be very negative for these oil marketing companies. Right now their marketing margins are well above the average, but going forward they think the investors will doubt the sustainability of these margins, and that is what we've been talking about since last 2 weeks. They also think that continued crude prices also at the higher levels, that will be negative for these companies, and continued EPS downgrade by everybody, like how we have spoken in the last week, by every brokerage, that will really be very pressurizing on the stock, and they expect the downtick to continue in weeks coming forth.
Okay, thank you very much for that. Nigel, Ultratech Cement?
Well, that stock, in fact, Rima, is up in today's trading session. Positive rub-off because ACC came out with a set of numbers that looked much better than what the street was working with. But today, in fact, the management is saying that they've commissioned their greenfield projects. That's a 2.5 million ton project. That's in Madhya Pradesh. Remember, this is getting commissioned in less than 1 year. And importantly, on an EV per ton basis, the total cost was only around $90 on a per ton basis. So it's a record of sorts. And now the total capacity goes to around 96.5 million tons. When they initially announced this, I remember the street was factoring in 18 to 24 months to get this commissioned. If they're doing it in record time, that's why, in fact, the street likes it. Realizations were higher for ACC, so they're looking at, fine print from there. And also, getting capacity is on stream very, very quickly. Very good, Rima, for today. But I'm just worried if these cement capacities start coming out very fast, there could be some kind of an oversupply at some point of time. But today, the stock is up because of this.
Okay, thank you very much for that. Let's focus on Mishra Dhatu Nigam. That's a company which manufactures special steel, super alloys, titanium alloys, and it's been running up for the last 8 straight days. In fact, in the last 1 week, it's seen a rally of 52%. Tahir Badshah of Invesco Mutual Fund believes that it is the healthy performance of Midhani over the last 4 or 5 years which has made it an attractive buy. Listen in.
It's a company which is a near monopoly in this business and has been growing at about 20% quite consistently over the last 4 or 5 years, and healthy margins, healthy return on capital, ROIs of 25-30%. You don't really expect a lot more from these kind of companies, especially when they come to you at about 11-12 P multiples. So this was something which kind of took our attention, and this is how we have. This is how we've looked at not just this IPO but all other IPOs.
Okay, all right. Here's a quick recap of all the buzzing stocks we just covered. We had metal stocks, that's aluminum stocks like Hindalco, Vedanta, Nalco. You had Graphite India, OMCs like HPCL and BPCL, Ultratech Cement, as well as the new listing, that's Midhani. Well, on that note, we'll slip into a short break, I think. All right, I think before we do that, the Ahmedabad bench of NCLT is likely to pronounce its verdict in the SR Steel eligibility matter later today. Remember, both New Metal as well as ArcelorMittal, they were disqualified in the first round of bids for SR Steel under Section 29A. Ritu Singh joins us with what we can expect today. Ritu, over to you.
The Ahmedabad bench of the National Company Law Tribunal will pronounce its ruling in the SR Steel eligibility matter today. Now, to give you a brief background, both the bids submitted by New Metal Consortium as well as ArcelorMittal were disqualified in the first round of bidding for SR Steel under the Section 29A rules of the Insolvency and Bankruptcy Code. ArcelorMittal was disqualified for being the promoter of a defaulter, that is Uttam Galva Steels, on the date that it submitted the bid for SR Steel, even though it had exited its stake in the company, but that did not reflect in the SEBI records. And New Metal was disqualified because one of their partners, Revant Roya, is a related party to the promoters of SR Steel, that is Ravi Roya, is actually his son, on the basis of which both of these bids actually were disqualified, and both of them had gone ahead and challenged this disqualification in the court. So that ruling will be later today. It is important also because until this ruling is divided, bids that have been invited in the second round will not be opened. Remember, New Metal along with New Metal along with JSW, ArcelorMittal along with Nippon Steel as well as Vedanta Group are the 3 bidders that have submitted their bids in the third round. So their fate also will depend on what today's NCLT ruling is.
Okay, thank you very much, Ritu, for that. We understand that the verdict could be out closer to 4 o'clock. But in a big development ahead of the Fortis board meet to decide the buyer, large FIs have asked for an EGM. That's an extraordinary general meeting of shareholders to dismantle the present board. Meanwhile, suitors have also been actively pushing their offers with revised bids. Nisha Poddar joins in with all the details. Nisha?
So the outcome of this crucial board meeting will be extremely important, especially at a time when the bid offers were coming in, the suitors had to be decided upon. The shareholders, the large FIIs and led by Eastbridge Capital, have really taken the plunge. They have attacked the board and have sought to dismantle the current board of Fortis Healthcare, and they have even proposed the appointment of independent directors of their choice, the names being Subbalakshmi Chakravarti, Ravi Rajagopal, Pal as well as Indrajit Banerjee. So this is a big development, and in this light, the board will also have to take up the proposal and the requisition that has been put forth by these large shareholders of the company. So that EGM is also something that the board will decide on. But apart from that, the four offers, TPG Manipal, with which they already have an exclusivity, apart from that, IHH has revised its offer and has proposed to give 4,000 crore rupees more, but it's still non-binding in nature. Apart from that, Munjals and Burmans have really gone aggressive and upped the price and upped the upfront payment to 750 crore rupees. And apart from that, the Chinese player Fosun has also been in the fray to give interim relief, but that is also non-binding in nature. So these are the offers that the board was supposed to deliberate on. But the big question for everybody is going to be, as far as the shareholders are concerned, they have shown that they have lack of faith in this particular board. Will the board go ahead and make a decision? Because the final decision will have to pass the muster of the shareholders, and whether or not they will approve of anything that the board really decides. Hear out Mr. Munjal, whom we spoke to on his revised offer this morning.
We believe we already had a very good offer that we had made, but because partially of the multiplicity of offers coming in, and also looking at the need of the company, we've revised the offer to make it even simpler. We've increased the upfront amount. I think the company both deserves and needs the both the higher quantum of funds and the urgency of getting it quickly. There has been a call by some of the shareholders to replace the board. And for a company of this size, the board potentially probably should be larger. But today the board is what it is. So we are dealing with the board as it is. We've asked for seats on the board already.
Okay, 4 board members today as of 8 historically. And Nigel, just take a look at the board members. One of them is Sabina Vaisoha, who was appointed only on the 27th of March, the same day the Manipal bid came through. The second one is Lieutenant General Tejinder Singh Shergill, who was named an additional director on the 12th of February. So what, just about 2 months ago?
Yeah.
The third one is Brian Tempest, the ex-CEO of Ranbaxy. The fourth one is Harpal Singh on the board of Religare. So the first 2 names that I named, Sabina as well as Mr. Tejinder Singh Shergill, you know, people are raising question that they've hardly been on the board of Fortis, just a matter of few days and up to 2 months for the Lieutenant General. And the other 2 names, Brian Tempest and Harpal Singh, they're already associated with the group, you know, the group members of Ranbaxy or Fortis. So therefore, there are questions raised on the effective control when they go ahead and decide on the 4 bids that have come through, which is why I think the FIs have raised that question that, you know, perhaps we want to, you know, some changes to the board members because they're not comfortable with the current.
Absolutely. Absolutely. We'll have to keep an eye out on this very, very closely. What happens? Will the board get dissolved? You know, that's a question that people are asking as well.